Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, October 5th. It's 6:30 as I'm starting the video. And as always, if you're new here, please run your video player at 1.25x. I think you'll find that's the right speed. What I'm going to do this morning is something a little bit different. I want to zoom out to the weekly charts to show you what's going on the indexes, and then we'll drill down into the fat man names. Then I want to go through the ARK complex and also give you a couple of other chart setups. So taking a quick look at equities, we're up about 0.4 across the board on the indexes, trying to put in a little bounce. Oil is up marginally. Nat gas is up 4%. Copper is down 1%. On the macro front, we've got international trade, composite PMI number, ISM services, and Redbook. And this morning, really only one company to note on the earnings front, and that's Pepsi. I think it's going to be a good one. It's, a bellwether consumer staples. They got, everything from soup to nuts across the globe. I think some of their commentary might have pull a little bit of weight, seeing what's going on with their input costs, seeing, how much they're able to pass that along, the impact of inflation on margin, what's going on with their supply chain, the whole 9 yards. So that'll be an interesting one to watch this morning. And before we get into the charts, I want to ask you this question or remind you about it. I want to ask you this question. What is your first obligation as a trader as we, sit in front of markets and things are changing? What would you say is the most important or primary obligation of a trader? Well, in my mind, it's to preserve your capital, right? The only thing that kicks you out of the game is if you go broke. So if you're continually, as the market turns here, the reason I say that is because there's a lot of traders out there that have reflexively, bought every dip. They're always long calls, and now they think that might continue, and then they get run over, and they keep trying to do the same thing that worked 3 weeks ago, and it may not be the case. So remember, if you've had a good run, or even if you haven't, protect your capital first, make money second. That's the way it's got to be, because if you switch those around, you could get materially hurt pretty quickly. So keep that in mind. Now, I also had a question on the YouTube channel by a relatively new trader by the name of Gemini Woman. And she said, can you kind of explain pivots? It's something I say, your pivot's here, your pivot is there. And all I mean by that is a point on the chart of significance where I think a reaction is likely, and often that aligns with support and resistance, but not always. So here on the US dollar daily chart, we had a very distinct line of resistance, rejected here, rejected here. So that was resistance. That was the prior top. We had quite a number of days right here where it also acted as firm resistance. And then we broke out, and now we're coming back for a back test. So on this chart, your main pivot, your main point of reference, if you will, is 93.50. So as long as price stays above the 93.50 pivot point, bulls are in charge. If it were to drop below that and come back into this big trading range, then price would be on the quote wrong side of the chart. You have to favor, once you break out, and as we've talked many times, once you break out, you don't want to see price come back into the trading range, because then it means that this was a fake breakout, didn't hold, and now you're back in the, back in the range. So when I go through and talk about pivot points, they are locations on the chart that line up technically with usually support and resistance, where you should anticipate a reaction. And then as you move through pivot points above, those are places where you can move up your stops and your strikes, or however you want to do it, because you've crossed another hurdle. So I'll kind of point that out today, and you and Gemini Woman, and you, if you're new to trading and are trying to pick up the concept of pivot points, I'll try and make that more clear as we go forward. So US dollar, just staying above both the channel and the breakout level. So we've got to keep that in perspective going forward. EEM usually goes down when the dollar goes up. We lost that 50 level yesterday, and so now we're down below. There could be some little additional support here at 49.50, but that's certainly a level to watch. Nothing much happening with rates, just hovering right around 1.5%. Moving on to TLT, which trades opposite, below the 200, below resistance at 145. If you're short, I'd stay short. And I think, time frame is everything. Whether you're short for Friday or January, it makes a big difference. But as long as you're down below the 200, the bears should be in the driver's seat. Any break above the 200 would be certainly a place to cover any shorts that you had. VIX, we've been toggling now in this range between 25 and let's just call it 20. We're trading this morning right at 23. So directionally, we're just looking for trend during the day. Big inflections will come if we break out from 25 and go higher, or we break down below 20 and go lower. So we're in this range right now. If we're green at the open, that'll come down a little bit, but you can tell the last week we've toggled between 25 and 20. So that's something to usually keep on the board when you're doing your trading. Nothing useful on the oscillator, still in the middle of the range. I really thought that over the last few days it would have dropped a lot more, but it really hasn't. Here's a quick look at the commodity aggregate complex. And what this does is just an aggregate of all the commodities weighted by importance. About half of the CRB index, actually I think it's about 45% is oil, and then it goes on down, aluminum, cotton, coffee, orange juice, all that stuff is put into a big index on the CRB. And you can see right here we're at, let's just call it 230. We are back at where we were in 2015. And so as we emerge here or break out, the next overhead resistance level, if you will, is at 270. So we're heading up. I think we all know that, and this is where a lot of the inflation is coming from, right? Gasoline and everything under the sun is going up, including commodities. So definitely in bull market mode until otherwise. But if you wanted to keep track of this, it's just at least on the stock charts platform, the symbol is $CRB, and then you can replicate this chart, daily, weekly, monthly, however closely you want to track it. But I just wanted to show you we're at a key level right here on commodities. Equal weight SPY outperformed the cap weight yesterday. It was only down 0.63%. I think going forward here, no changes technically, really. The bulls need to break this out above 150, 150, and then reclaim 153 to kind of get on the right side of the chart, if you will, because you see all of the moving prices still below all of the moving averages, the 8, the 20, and the 50. And as long as it stays below, the posture has to be bearish until those levels are recaptured. But it was interesting to note yesterday that the equal weighted SPY outperformed by a pretty wide margin. Okay, I want to show you the weekly chart of the indexes to kind of give you the big picture of where we've been and where we might be going. This was our pandemic low back in March of 2020. We had the big impulsive move, and we spent a little time consolidating in late last year, and then we've made another run. So what I've done is put on the Fibonacci retracement levels from last fall's consolidation to the recent highs. And what you see here is that just for a run-of-the-mill 38% retracement brings it back to, let's just call it 400. Now, in between where we're at now at 430, we've got the 40-week exponential moving average, which corresponds to the 200 on the daily. A 40-week moving average is the same as a 200-day moving average. So that comes in at around 412. So we could come down into this 412 area, possibly even undercut it down to 400. And I would expect, some type of meaningful bounce there. We'll have to wait and see. But you can see in this, whenever you've got a steep wedge like that, technically it's called, a bearish rising wedge is how a lot of technicians would describe this. And it's kind of counterintuitive. Stocks are going up, which is bullish, but you would call this structure a bearish rising wedge. Why? Because on a break of that, that's your sell signal, if you will. So we broke down a couple weeks ago, and now we've moved down to a certain degree. And here it is on SPY. Now, one thing I want to share, or what my feeling is that I believe the charts and trader psychology have changed in the last week or so. Why? Because, I'll move this up so you can see it. We know that for however many months, anytime there was a sell-off to the 50, the dip buyers stepped in and put in a V bottom. We had that here, we had that here, 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 and here they tried at the bottom of the channel, logical place to buy. If you're a technical trader, they tried on this candle, and that got rejected. And then we broke down. This was on a Friday, and then this was the Evergrande drop here. And so, again, dip buyers, auto response, right? Buy the dip. It always works. And we got the reflex move into resistance, and then they gapped it down again, and now we've come down. They tried to bounce it Friday, and then that was faded yesterday. So traders keep doing what works until it doesn't. And my point is that traders are realizing, hey, buying that dip isn't working anymore. And the bounce here was a lot less enthusiastic than the one here. So and now, to make matters worse, if you will, we're on the wrong side of the chart, because now all the moving averages have rolled over, and now the moving averages are bearishly stacked, whereas over here they were bullishly stacked with the 8 above the 20 above the 50. Now we've got, the 8 EMA leading to the downside. And remember that, like as an example over here, price was riding the 8 EMA higher. Notice here that price is riding the 8 EMA lower. See that? Drop down. There's a little green bar here. Touch the 8-day. Next day, touch the 8-day. Friday, touch the 8-day. Yesterday, touched the 8-day and was rejected every single time. So as time goes on, and as these moving averages proceed, if things don't change relatively quickly, you're going to have the 8 lower than the 20, lower than the 50, and then that will be, more evidence that we're in a sustained downtrend. So what do we do today? Also let me point out that when you're in that mode, you've got to be skeptical of bounces until price can prove otherwise. And so as we find ourselves here at support at yesterday's close, down at 428, 427.50, whatever you want to call it, what would change your mind is number one, to break above this downtrend line of resistance, and move above this level of resistance here. Basically comes in at 436, 437. We'll see a little better on the 2-hour chart. But my point is that don't get all excited with a single green bar today unless they just, bomb it upwards and break out. I doubt that's going to happen because now the dip buyers are kind of scared that psychology has changed. So if bulls do step in and give us a green bar today, that's fine, that's good. In order to get back technically going in the bullish direction, the number one thing would be a breakout above the downtrend line. The second thing would be recapturing the 50. The third thing would be filling this gap, and then a breakout above 442 that will have negated a lot of the selling. Now that's, a stair-step process, but I think the first real signal, if you will, would be a break above this downtrend line. Here it is on the 2-hour chart. Note the bullish divergence. What is that? You've got a low here, and you've got a low here. So lower low, but on momentum, we've got a low, but then a higher low. So that's bullish divergence. You can see it here on RSI as well. If you line these up, low in momentum, low in RSI, but now here we're lower in price, but momentum is higher, RSI is higher. So from a technical standpoint, there's room for price to go higher, and that's supported in the indicators, but these can always just roll over and, price make a little move up here to say 432, and then they fade it and just roll it over. So just because you have bullish divergence doesn't mean buy. It just means that there's some buying under the surface that's going on that may support a move higher. So today, we know we've got our low down here at 437. I got a little level right here at 429 that if they can recapture that, got a level at 432. There's something here at 433.50, but if it gets above 432, I think price will be able to navigate that 433.50. But your big pivot overhead is 436. Notice, and the reason for that is, notice all these rejections here, and notice just the other day we had a big reach up to 436 that got rejected. So breaking above 436 would be a really, really nice bullish development. But you've got your levels there. The level below, if we break down from 427, I have as 422.50 being a target. And then the 200, remember, comes in around 412. So here it is, QQQ on the weekly. You notice that we had bearish divergences in place as we were heading higher. Momentum was heading lower, and we dropped out of our wedge, and now we've pulled back. We've got the 40-week moving average coming in at 341, and we've also got the 38% retracement coming in at 340 as well. So if we move down towards 340, 342, I think that's a logical place to look for first, a big level of support. Let's look at it on the daily. And so yesterday, 352.50 was the closing low. Notice that we had a reach down in the middle of the day down to 350, which is the top of this gap. And, first touch of the gap usually holds. And we got to bounce up to 352.50. So today, anything above 352.50 is going to be positive. I think your first resistance is 360. I think that's a big pivot level. Why? Support, 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 rejection, rejection, rejection. So 360 is a big line of importance, a big pivot point in the chart. If price were to rally up to 360, that's where you've really got to pay attention for them to either fade it or to break out. And we've got this nice downtrend line after, if they break it out above 360, we can move up to this 365 area, 366, where the downtrend line and the gap entry both coincide. But let's go ahead and look at it on the 2-hour. Here was our low down towards 351. They closed it up at 352.50. I've got a little level of resistance here at 356.50, but then the big level at 360. So if you're an active trader and we got the green open, right? We're up a little bit in the pre-market. If that holds, remember there's going to be a gap below. And so be ready for a back touch of 352.50. And if you got that, that would be an objective place to be a buyer, but you've got to have a tight stop on that. So just be ready for that. But if they give you a big bounce up to 360, that's certainly something worth noting. IWM, you got a nice line here down around 219.50. I think you can be long against that with the big pivot level being up at 222. We see that here on the, I had that backwards, sorry about that. Here we are on the daily chart. The big, we're in this big trading range. The main pivot is 222 with some resistance at 224. You see the 200 coming in here at 212, and then the bottom of the box at 210. So those are the areas of focus. I'm sure you've been following along on Facebook. We're right at the 200. So now, I mean, there's no more important place on the chart than the 200. Technically, you should expect a bounce here. If it doesn't, you can be short Facebook against 325 and then look for a move down towards 300, I think, is your next big level of support. And then 285, 280 below that. So never think that, oh, that's enough. If you get a break of the 200, very, very objective place to get short. Apple daily, we're coming down. I think we ultimately find this layer right here of support at 136, and that would be your objective place to try along with trend support and lateral support both coinciding, and then you've got a fail-safe stop of the 200 rising to 134. So you'd have basically $2 of risk versus getting long for a potential rally off of the 200. Tesla's chart looks totally different than most charts. Why? It's still in this nice bull flag. I've dropped in a midpoint of this trading range at right at 780. I think you can be long against 780 and look for 790 in a breakout. If you lose 780, you're going to come back to 770. And if you lose 770, you're going to come back to 760. I think these line up very well with just these even numbers on the chart: 790, 780, 770, and 760. And you can see we had a fake breakout yesterday up to right a little beyond 800. So it's trying, and it's shown some remarkable relative strength. Amazon daily, fake breakout, earnings gap down, rally back to the top of the box, rolled over. Now we're below the 200. We're below the midpoint of the trading range. We have a prior low at 31.75. If it loses 31.75, I would bet almost anything that it's going to come down to 29.50 at the bottom of the box. And it's really funny how all this stuff works. We say all the time, once you break out of a trading range, you don't want to come back in because the target becomes the bottom of the box. And so here we were, gap down, came down. Oh, here they go, they rally it. But look where it stops, right at the top of the box. And now they're rolling it over again. And, the bottom of the box is not that far away. So all eyes with Amazon on 31.75 to get back on the right side of this chart. Got to recapture 32.50, and then you got to recapture the 200, which comes in at 32.90. Google. Well, let's look at it on the. Or went the wrong way. I wanted to show you the 60-minute on that. Yeah, here's the 60-minute. We had this $50 gap mapped out, came right down. Remember, we had a look that failed the other day, and then this was the Friday rally, and then yesterday, right down to the bottom of the box. I mean, that's why I draw the lines, right? That's why we draw gaps. Stopped right on a dime and reversed. So today, I didn't move these, but today your pivot is 26.85 at the top of the gap. If they can break out above, I think you can be long. But while it's inside here, I think it favors lower. So use 26.85 as your pivot. And then onto Netflix. Totally different than the other charts. Why? Because selling has not hit it yet. It's still in bull mode. ramp, orderly pullback, back up to the top. I think you can use 615 as your pivot. Any breakout above, you can be long. Any while it's below, I think you got to be careful. And I think your first downside target is going to be 585, and then below that back to 570. So Netflix showing a lot of relative strength. Semiconductors, I think here it's pretty simple. 248.50, 249. If you can break above 251.50, then you've got layers of resistance above. I think the big pivot is back at this primary breakout line at 258. Remember, we're back in this big box, and that means we've gone out of the box and now we're back in. So this thing is vulnerable to go all the way down if we get into a nasty bear market. But right now we're holding this 250. We've got another little layer at 247.50, and then we've got the 200 coming in at 242.50. So that's the big picture. What we really want to see is this 258 recaptured. All right, let's blow through ARK. ARK FinTech, right here at 48. That's your pivot. Below 48, look for 45. As long as it holds 48, the bulls have a chance. But notice, below all the moving averages, below the 200, I think you got to favor a break of this level. If you got a kickback rally into the 200 that you get a sense is failing, you can get short there with a stop just above 51, and then see if they, bring it back down. But I think right here at 48, you've got a nice pivot point. ARKG. Last stand, 72. Here was the prior low. I think we had talked about this level at one point. That let go. Now we're at 72. Got to hold here. If it doesn't hold here, it goes way down. You can go look on the weekly chart to find out lower targets. But this is a big spot right here on ARKG. Here's the flagship ARK-K. Right here, 107.50. That's your pivot, with your first target being 100, and then your second target being down here towards 88, something like that, I would say. And remember, I believe in the ARK-K fund, Tesla's the biggest holding. So, and Tesla's been going up. Tesla's been bullish. So to see this go down like this when the largest holding is going up tells you just how weak the underlying stocks are in this particular ETF. So below all the moving averages, below this main support level at 115. Now we're down at 107.50. I think it's got to hold here, or else we come down to 100. If we had a little rally that brought you back up to 115, I think that's where you, or just technically speaking, you should put on a short. Why? Because price is rallying into resistance and below all the moving averages, including the 200, and that makes it an objective short. Here's ARKQ. you can tell this is an important line here at 77. And if you wanted, you could say, okay, well, I'm not really going to mess with it till we take out this low here. That's fine. That comes in around 74. But below that, nobody home. You see the big void in the chart over here. So either 77 or 74 you can use as a pivot. Arc W, trading range in the box between 155 and 137.50. You lose 137.50 coming down to 122.5. And you can see that that's just eyeballing it. You can see that that's a measured move, right? Funny how it works out like that. You break the box, then your target is the width of the box down, and that brings you right into that 122.50 area. One last chart, we'll wrap it up. Peloton had this low back in May, rallied it back. Now we're back to the low, and we're right here at 80, 81. But I want you to look at the weekly. Look at that. It's got to hold here, or I mean, it's over. It's over. Look at that void. Really nothing down to, 42, 45 in that area would be like your first real area of major support with this volume over price bar. So if you go through, and just as a side note, PE of negative 120. Great company, great products. Everybody likes them. Not a bad word to say, but they lose money, right? And that's the definition of a bubble stock. Big dreams, big aspirations, but losing money every quarter. And I think Ponzi gets decimated in this environment. So if you're interested in Peloton, sit up taller in your chair, because it could get really, really exciting on a break below. So longer video. I hope you found it beneficial. I've got a lot of setups for you. I'm going to try to get something out to you as soon as I can. I'm going to start on it right after this video wraps. So look forward to that. I'm going to dispense with all the niceties at the end of the video. All I can say is, if you're new here, I really appreciate it. Hit the subscribe button and the alarm bell. Lots more coming your way. There's a link in the show notes where you can register for all my content. I encourage you to do that. I think it'll help you in your trading. And of course, longtime listeners, goes without saying, I really appreciate your support and sticking with me. This has been Chris Buss with Traders Profit Compass. Talk to you next time.